Hello, folks. This is Steve Memory from Iconic Wealth Management with an educational economic update for December 2018. In this month's video, I'll review some of the issues that influenced markets in November. We'll take a peek at what's happening at the beginning of December, and of course, provide some insight into what these developments could mean for you as an investor. Now, please stay tuned at the end of this video for a required disclosure statement. After a rough October market, we were giving thanks for November. The month closed on a strong note despite its volatility. Details like trade disputes, oil supply, and dropping prices caused markets to fluctuate throughout the month. By month's end, however, investors had showed optimism as the market rebounded. For the month of November, the S&P 500 rose 1.8%, the Dow gained 1.7%, and the Nasdaq experienced a slight 0.3% bump. One reason for November's upturn was the annual G20 summit in Buenos Aires and the anticipated meeting between President Trump and China's President Xi. Ahead of their session, the Dow rallied nearly 200 points. The leaders planned to meet to discuss cooling down the tense trade environment in hopes of finding consensus between the two countries. And that optimism was replaced with concern in the first week of December as investors questioned the details of the trade framework. The subsequent arrest of the CFO of Chinese telecom giant Huawei by Canadian officials has further reduced expectations of a near end to the looming trade war. Meanwhile, President Trump, Mexican President Enrique Peña Nieto, and Canadian Prime Minister Justin Trudeau signed the U.S.-Mexico-Canada agreement, which must still pass Congress. While some are hopeful that the North American Free Trade Agreement replacement will resolve trade disputes, others remain skeptical. G20 news also impacted oil, which had its largest monthly decline in 10 years. Continuing from October, oil prices fell 22% throughout November on fears of an international surplus. Leaders from Saudi Arabia and Russia met at the summit to discuss solutions before OPEC's December meeting. These developments boosted investor confidence in November, and ultimately Saudi Arabia and Russia agreed to production costs this past Friday. One bright spot in the oil market. The U.S. revealed that for the first time since 1943, about 75 years ago, it has become a net exporter of oil. That's thanks to the boom in shale oil. The shale boom has transformed the United States into the world's largest petroleum producer, surpassing Russia and Saudi Arabia. Now, updates on interest rate hikes also helped November finish on the upswing. On Wednesday, November 28th, Federal Reserve Chairman Jerome Powell remarked that interest rates are close to the current neutral range of about 2.5–3.5%. His comments seem to suggest that the Fed may throttle back interest rate hikes, which caused stocks to rise. Still, economists expect interest rates to increase in December and in 2019. Additionally, a variety of key data was released in November that suggests the U.S. economy is still on track for growth. U.S. factory production climbed higher than expected, with the ISM Manufacturing Index beating expectations at 59.3. And remember, any number above 50 registers growth in the industry. Still, construction spending dipped for the third month in a row, falling about 0.1%. Consumer confidence now also remains high, although it slipped in November after an 18-year peak. The index suggests that some Americans worry about their income and the state of business in the U.S. Nevertheless, tax cuts and a solid labor market have helped boost consumer confidence. Further, we learned that economists predict more than 200,000 jobs were added in November. This development keeps the unemployment rate hovering near 3.7%. That's the lowest in 48 years. Also, revised Q3 Gross domestic product numbers show a 3.5% increase, with corporate profits reaching 6-year highs. Now, while the trade war tariffs still loom as a potential road hazard, taken together, these healthy indicators suggest that the economy is on the right track as we close out 2018. As additional data and information from November become available, we will have a clearer understanding of the month's performance. But with trade and oil conflicts in talks at the G20 summit, investors can now turn to December and the new year. Now, the fourth quarter thus far has been a tale of negative pressure on the market. The technical indicators say we're about 15% oversold to this point. But remember, in the long term, fundamentals drive stock prices. And we encourage you to continue to focus on the fundamentals. That's it for this month's Educational Economic Update. Once again, this is Steve Memory with Iconic Wealth Management, signing off for the month of December 2018. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 703-891-9518. We'd be happy to talk to you.